Hi everyone, so here we are on our fourth topic to be discussed by our group, the diluted earnings per share, convertible preference shares, and convertible bonds payable. So before we start, let's have a brief discussion about diluted EPS. Himay-himayin natin yung term. What do we mean by diluted ba? Diluted means to weaken or to lessen. Dilution takes place or arises when the inclusion of the potential ordinary shares decreases the basic earning per shares and increases the loss earnings per share. Itong diluted earnings per share, kung matatandaan po natin, this is one of the computation to get the earnings per share of an entity. Diluted earnings per share ay nagte-take place lamang po where the capital structure or when the capital structure of a company is complex. Meaning to say, there are ordinary shares or potential ordinary shares. Ano nga po ba yung potential ordinary share? Dito po sa diluted earnings per share, naka-include po dito yung potential ordinary shares or the financial instrument representing future issuance of ordinary shares or sa madaling salita, yung mga financial instrument po na may potential na ma-convert into ordinary shares. And the potential ordinary share po ay mayroong three major types. The first one is the convertible bond payable. The next is the convertible preference share. And the next one is the share option and warrant. So, ang di-discuss po natin for today's topic is the convertible preference shares and the convertible bonds payable. As an addition po, the diluted earnings per share, the computation is based on the as-if scenario, as if the convertible bonds payable is converted into ordinary shares, the preference shares is converted into ordinary shares, and the shares, options, and warrants are exercised.
So, dito po sa problem number 1, ang hinahanap po dito natin is amount ng diluted earnings per share. So, ang formula po natin dito is net income over total ordinary shares. So, since meron na po tayong ordinary shares outstanding na 200,000, i-add lang po natin yung potential ordinary shares to be issued for conversion of preference shares, which is 100,000. Bakit po? Kasi po, convertible siya. I-assume po natin na it is already converted into ordinary shares. So, 200,000 plus 100,000, makukuha po natin yung total ordinary shares na 300,000. So, yung 300,000, i-divide lang po natin siya sa net income na 840. Makakuha na po natin yung diluted earnings per share na 2.80. Under diluted earnings per share, the annual dividend on the convertible preference share is no longer deducted from net income because it is assumed that the preference share is already converted into ordinary share.
Before I proceed to the problem and solution of Chapter 33.2, let's have a quick recap first. Do you still remember that there are two types of earnings per share? The first one is the basic earnings per share. Second is the diluted earnings per share. The basic earnings per share had been discussed in the previous chapter. Now, let us study the diluted earnings per share. Do you know that the diluted earnings per share can be classified as a potential ordinary shares? For example, a debt instrument is convertible to a ordinary shares. There are also four types of diluted earnings per share: the convertible preference shares, convertible bonds payable, shares option or share warrants, and the multiple potential ordinary share. Now, let's proceed to the problem 33.2. First, I want to read the problem. Cox Company had 1,200,000 ordinary shares outstanding on January 1 and December 31, 2021. In connection with the acquisition of the subsidiary on previous year, The entity is required to issue 50,000 additional shares on July 1, 2022 to former owners of the subsidiary. The entity paid 200,000 pesos annual preference dividend in 2021 and reported net income of 3,400,000 pesos for the current year. The preference share capital is non-cumulative and non-convertible. The question is, what amount should be reported as diluted earnings per share? A. 2.83, B. 2.72, C. 2.67, and letter D. 2.56. Now, let's proceed to the solution of problem 33-2. Ordinary shares outstanding is total of 1,200,000. Potential ordinary shares to be issued in the acquisition of subsidiary is 50,000. Total ordinary shares is total of 1,250,000. Net income is 3,400,000. Preference dividend is 200,000. Net income to ordinary shares is 3,200,000. To compute the diluted earnings per share, we have first to get the net income to ordinary shares, which is 3,200,000 over the total ordinary shares with a total of 1,250,000, and the computed diluted earnings per share is 2.56. Note that the preference share is non-convertible and therefore not a potential ordinary share. Thus, the preference dividend paid is deducted from the net income. Oh, I forgot to say hello, Saibel. How are you?
Problem 33-3. Petroc Company provided the following information at year-end. During 2021, Petroc Company paid dividends of 1 peso per ordinary shares and 2.4 per preference share. The preference share capital is convertible into 20,000 ordinary shares, and the net income for 2021 was 285,000. The income tax rate was 30%. So, ang tinatanong po dito is what amount should be reported as BEPS and what amount should be reported as DEPS. For our solution po, ang tinatanong po sa number 1 is amount that should be reported as basic earnings per share. Our formula is net income less preference dividend, if there is any, divided by ordinary shares actually outstanding. So, we have net income of 285,000 as per given, less 24,000. Saan po galing ito? Galing po sa 10,000 na preference shares multiplied by 2.4 is equal to 24,000, and less po natin. The answer would be 261,000, the net income ordinary. So, basic earnings per share, 261,000. Divide lang po natin sa 90,000 na ordinary shares actually outstanding. So, we will arrive at the BEPS of 2.9. The annual preference dividend is deducted from net income for basic EPS whether the preference share is convertible or non-convertible. Pagdating po sa number 2, the question being asked is the amount that should be reported as the EPS. So our formula is net income over total ordinary shares. And the net income po dito is not reduced by the amount of preference dividend. So, ordinary shares, outstanding, 90,000. Add po natin yung potential ordinary shares na convertible preference shares, which is 20,000 po. Nasa given po natin. So, add po natin, we'll arrive at the total ordinary shares of 110,000. So, 285,000 divided by 110,000, the diluted earnings per share is 2.59.
In problem number 4, we need to find out the amount to be reported as basic earnings per share and the amount to be reported as diluted earnings per share. Again, the formula for computing the basic earnings per share is net income less preference dividend over the total average shares outstanding. So, at the beginning of current year, the Angel Company had 100 ordinary shares outstanding. Then on September 1, the 10,000 convertible preference share were converted into ordinary shares, and each preference share was converted into 6 ordinary shares. So 10,000 times 6 times 4 over 12 is equal to 20,000. The average shares outstanding is 120,000. Second step, let's get the net income allocated to ordinary shares. So there are 2 million net income less preference dividend of 50,000. So paano na-compute yung 50,000? 5% times 1 million. Yung 1 million is preference share capital. 10,000 preference share times 100 par value. The net income allocated to ordinary share is 1,950,000. 1,950,000 divided by 120,000 is 16.25 basic earning per shares. Question number 2 is what amount should be reported as diluted earnings per share? So, may outstanding na 100,000 noong January 1, then on September is yung preference conversion. Hindi na natin kailangan i-average yung preference conversion because ang rule sa computation ng diluted earnings per share, the conversion is assumed to have taken place on the date the potential ordinary share first become outstanding. So yung preference share is first become outstanding noong January 1. So 10,000 times 6 is 60,000. The total ordinary share is 160,000. And then yung net income is 2 million. Hindi na rin natin kailangan i-less yung preference dividend in the assumption that the preference share is already converted into ordinary share. So 2 million divided by 160,000 is equal to 12.50 diluted earnings per share.
In this problem 33-5, the front company had 2 million ordinary shares outstanding, issued 500,000 on July 1 preference shares, which is convertible into 300,000 ordinary shares. In that year, the entity declared the 1 million cash dividend on the ordinary shares and 800,000 cash dividend on the preference shares, and the net income for the current year was 6,500,000. The question, what amount should be reported as the basic earnings per share? And question number 2, what amount should be reported as diluted earnings per share? Solution for problem 33-5, the question number 1. The basic earnings per share is equals to net income divided by the ordinary shares is equals to net income is equals to 6,500,000 minus the preference dividend of 800,000 is equals to the net income, which is the ordinary net income of 5,700,000. So basic earnings per share is equals to net income divided by ordinary share. 5,700,000 divided by 2 million is equals to 2.85. The question number 2, the answer is 2.85 diluted earnings per share. The diluted earnings per share is equals to net income divided by the average ordinary shares for diluted earnings per share. So January 1 share outstanding is 2 million plus July 1 potential ordinary shares is equals to 300,000 times 6 over 12, which is the fraction for July 1, which is 150,000, is 2 million plus 150,000 is equals to 2,150,000. The diluted earnings per share is equals to 6,500,000 divided by 2,150,000 is equals to 3.02. The rule is the effect of the convertible preference shares in an increase of earnings per share and therefore anti-dilutive. Thus, the diluted earnings per share should be the same as the basic earnings per share of 2.85.
Problem 33-6. At the beginning of current year, Baraka Company had 480,060 pesos par value ordinary shares and 100,000, 10% 100 pesos par value convertible cumulative preference shares outstanding. The preference shares are convertible into 100,000 ordinary shares before share dividend and share split. During the current year, the following transactions affected the ordinary shares. On February 1, issued 120 shares. March 1, issued a 20% share dividend. May 1, acquired 100,000 treasury shares. On June 1, issued a 3-for-1 split. And no October 1, reissued 60,000 treasury shares. And the net income was 35 million pesos, and the entity did not declare dividend on preference shares. In this problem, we are going to find the average ordinary shares outstanding, the basic earnings per share, and the diluted earnings per share. Let's first solve for question number 1, the weighted average outstanding shares. On January 1, we have 480,000 ordinary shares times 1.20 kasi inad natin yung 20% na share dividend times 3 na share split times 12/12 na kanyang effectivity amounting to 1,728,000. Noong February 1, meron tayong 120,000 na inisyong share times 1.20 times 3 times 11/12 amounting to 396,000. Noong May 1 naman, meron tayong inacquire na 100,000 treasury shares times 3 times 8/12 na 200,000. Deduction siya. Kasi siya ay treasury shares. Noong October 1, meron tayong 60,000 na rini-issuing treasury shares times 3/12, meron tayong 15,000. Amounting to a weighted average outstanding shares of 1,939,000. Moving on to question 2, we will compute now for the basic earnings per share. So, meron tayong net income na 35 million, preference dividend na nakuha sa 10% times 10 million. 10 million kasi meron tayong preference shares na convertible na 100,000 times doon sa 100 pesos na par value. So, meron tayong i-deduct na 1 million. Thus, ang net income natin ay 34 million pesos. Moving on to question 3, ang i-compute naman natin ay para sa diluted earnings per share. So, meron tayong average outstanding shares na 1,939,000. Ang average potential shares natin ay nakuha sa pamamagitan ng pag-multiply ng preference shares na 100,000 times 120% times dun sa share split na 3 amounting to 360,000. So, ang total ordinary shares natin ay 2,299,000. Sa paggamit ng formula sa pagkuha ng diluted earnings per share, meron tayong 35 million over 2,299,000. Thus, ang diluted earnings per share natin ay amounting to 15.22.
So, dito po sa problem number 7 is parehas lang po sa mga nauna. Ang hinahanap lang po natin dito is yung amount ng basic and diluted earnings per share. So, start tayo sa basic earnings per share. Since given na dito yung net income, ang kukunin na lang natin is average number of shares. So, dito meron tayong outstanding na 500,000 noong January 1. And then, i-add lang natin yung additional ordinary shares noong October 1. Then, i-multiply lang po natin siya sa 3/12 which is yung number of months from October to December. Then, makakuha po natin yung 25,000. Ito total lang natin po sila para makuha natin yung average number of shares na 525. So, 6 million na net income divided by 525,000 na average number of shares, makakuha natin yung basic earnings per share na 11.43. So, let us proceed to diluted earnings per share. So, ang formula po natin dito is yung net income over average ordinary share. So, sa given po, meron po tayong ordinary share outstanding on January 1 na 500,000. Then, nung ordinary share issued on October 1 which is yung 25,000. And then, i-add lang po natin yung potential ordinary share for van conversion na 225,000. Makukuha po natin yung average ordinary shares na 750,000. The next step po is ipag-add lang po natin yung net income plus interest on bonds na 840 makuha po natin yung adjusted net income na 6,840,000. So, meron na po tayong average ordinary share and adjusted net income. I-divide lang po natin sila. Makakuha na po natin yung diluted earnings per share na 9.12. So, the interest on convertible bond is added back to net income because it is assumed that the bonds are already converted into ordinary share.
Ordinary shares outstanding. An additional 500,000 ordinary shares were issued on April 1 and 250,000 more on July 1. On October 1, the entity issued 5,000 of 100,000 face amount 7% convertible bonds. Each bond is convertible into 40 ordinary shares. No bonds were converted into ordinary shares in the current year. This is the questions. What is the number of shares that should be used in computing basic earnings per share? And the second question is, what is the number of shares that should be used in computing diluted earnings per share? This is the solution of problem 33.8. On question number 1, the answer is letter A, which is 3 million. Because on January 1, we have 2,500,000 times 12 over 12, which is 2,500,000 din ang total niya. On April 1, we have 500,000 times 9 over 12 with a total of 75,000. On July 1, we have 250,000 times 6 over 12, which is 125,000 in total. And the average shares in basic earnings per share is 3 million. On question number 2, the answer is letter B because on January 1, we have 2,500,000 ordinary shares. On April 1, we have 375 ordinary shares. On July 1, we have 125 ordinary shares. And on October 1, we have 500 ordinary shares times 40, which is the amount of the convertible bond, and times 3 over 12 because it is only 3 months before the year ends, with a total of 50,000. The average shares in diluted earnings per share is 3,050,000.
At the beginning of current year, Fortuner Company had 200,000 ordinary shares outstanding. On the same date, the entity had issued 4,000 convertible 10% bonds with 1,000 face amount. The bonds were converted on October 1 and 40 ordinary shares were issued and in exchange for each bond. Net income was 5 million. The income tax rate is 30%. The problems are what amount should be reported as basic earnings per share and to what amount should be reported as diluted earnings per share. For our solution, for question 1, tinatanong po is the basic earnings per share and our formula is net income over ordinary shares actually outstanding. So the net income po is given. We have here 5 million and on January 1, the outstanding shares is 200,000. Given din po. No October 1 po, nagkaroon ng conversion. So, 4,000 na bonds payable times 40 times 3 over 12, the number of months from October to December will arrive at the amount of 40,000. I-add lang po natin, the average number per share is 240,000. So, 5 million divided by 240 is equal to 20.83. For number 2, ang hinihingi po is diluted earnings per share. So, net income po natin is 5,210,000. Bakit po siya 5,210,000? Nasa next slide po, divided by 360,000, 14.47. For the total ordinary shares po, adjustment po dito is the ordinary shares are outstanding. I-add po yung conversion or the ordinary shares na equivalent kung na-issue po ang bonds payable. So, the conversion is 4,000 times 40, 160,000, add 200,000. The total ordinary shares is 360. So, for the net income is, ito po yung computation niya. The issuance of ordinary shares on October 1 is not average anymore for diluted EPS because the convertible bonds are outstanding on January 1. So, yung ina-assume po kasi, tayo po kasi nasa as-if scenario na kung saan the convertible preference shares, convertible bonds payable are assumed to be converted po. So, net income, 5 million. Interest on bonds net of tax from January 1 to October 1. We have here 4 million, the amount po ng ating bonds payable. Multiply by 10%, the stated rate. Multiply by 9 over 12, the number of January to October 1, number of months. Times 70%. Saan po galing yung 70%? Nabanggit po na siya ay net of tax. So, 100% plus 30% na tax rate is equal to 70%. I-multiply lang po natin, we will arrive at the amount of 200,000. So, the adjusted income is 5,210,000. Lagi po natin tatandaan na kapag po, pagdating sa bonds payable, pagdating sa diluted earnings per share po na convertible bonds payable, lagi po nating tatandaan na ang net income is adjusted by adding back the interest expense on the bonds payable net of tax. And yung atin naman pong ordinary shares is, the ordinary shares outstanding is increased by the number of ordinary shares that would have been issued upon conversion of the bonds payable. So, sa atin pong solution, ang net income po ay in-adjust natin. In-add po natin ang interest on bonds net of tax. And pagdating naman po sa ating, from the previous slide, pagdating po sa ating number of ordinary shares, in-add po natin yung number of ordinary shares that would have been issued upon conversion of the bonds payable. Yun po yung gagamitin nating amount para po makuha ang diluted earnings per share.
The question in problem number 10 is what amount should be reported as basic earnings per share and as diluted earnings per share. So, alam na natin ang formula for both computation. So, mag-proceed na tayo sa solution. On January 1, there are 100 ordinary shares outstanding. Then, on July 1, 200 bonds were converted into ordinary shares, and each bond was convertible into 200 ordinary shares. So, 200 times 200 times 6 over 12 is equal to 20,000. The average number of shares is equal to 120,000. The entity had a net income of 3.5 million. 3.5 million divided by 120,000 is equal to 29.17 basic earnings per share. For diluted earnings per share, ito yung solution. So again, may outstanding na tayo na 100 ordinary shares since January 1. Then on July 1, yung bond conversion. As a rule, hindi na natin kailangan pang i-average yung bond conversion because yung bond ay outstanding na since January 1. So 200 times 200 is equal to 40,000. The total ordinary share is 140,000. May net income tayo na 3.5 million. Pero i-adjust natin to by adding the interest and bonds from January 1 to July 1, 2020. 2 million because 200 bonds times 10,000 face amount times 7% times 70 times 70%. Yung 70% is the percentage net of tax kasi yung tax rate is 30%. Times 6 over 12 is equal to 49,000. 3.5 million plus interest na 49,000 is equal to the adjusted income amounting to 3,549,000 divided by 140,000 na total ordinary share, which will give us 25.35 diluted earnings per share.
Now let's move on to the next problem, problem 12. The shareholders' equity of Dynasty Company was affected by the following transactions during the current year. At the beginning of the year, there are 1,000 ordinary shares outstanding. On February 1, the company sold 21,000 ordinary shares in the market. On April 1, it purchased 5,000 ordinary shares to be held in treasury. On July 1, sold 35,000 ordinary shares in the market. On July 1, it also issued 1 million pesos, 5-year 10% bonds at face amount. Each 1,000 pesos bond is convertible into 50 ordinary shares. October 1, a 10% bonus issue was declared and distributed. On December 31, the net income for the current year was 2,926,000 pesos, and the tax rate is 30%. So in this problem, we're going to get the basic earnings per share and the amount of the diluted earnings per share. For question number 1, we're going to get the basic earnings per share. So no January 1, meron tayong 100,000 ordinary shares times 110%, amounting to 110,000. On February 1, meron tayong 21,000 na inisyu na ordinary shares in the market times 110% times yung range ng kanyang effectivity na amounting to 21,175. Noong April 1, may deduct tayo ang treasury shares na 5,000 times 110% times 9 over 12 amounting to 4,125. Noong July 1, meron tayong 35,000 na ordinary shares times 110% times 6 over 12 amounting to 19,250. Thus, meron tayong average shares sa basic EPS na 146,300. Gamit yung formula sa pag-compute ng basic earnings per share, meron tayong 2,926,000 divided by 146,300. So, meron na tayong basic EPS na 20 pesos. Question 2, we're going to compute for the diluted earnings per share. Noong January 1, gaya dun sa question 1, meron tayong 110,000. Noong February 1, meron tayong 21,175. Noong April 1, meron tayong treasury shares na 4,125. Noong July 1, meron tayo ulit na amount 19,250. At isa pang record noong July 1, ang sabi meron daw 1,000 pesos bond na convertible into 50 ordinary shares. Thus, meron tayong 50,000 ordinary shares times 110% times 6 over 12, meron tayong 27,500. Kaya, ang average shares natin para sa diluted EPS ay 173,800 pesos. Meron tayong net income na 2,926,000. Interest on bonds net of tax noong July 1 to December 31 ay 35,000. Paano natin nakuha yung 35,000? Ang sabi dun sa problem, meron daw tayong, ang tax rate daw ay 30%. So, we're going to get its net value by only multiplying 50,000 na ordinary shares doon sa 70% na net tax. Kaya, meron tayong amount na 35,000. Kaya, ang adjusted net income natin ay 2,961,000. By using the formula for the computation of the diluted EPS, we have 2,961,000 over 173,800 amounting to 17.04, which is our diluted EPS.
So, dito po sa problem na ito, ang hinahanap po natin dito is amount ng diluted earnings per share. So, una po natin gagawin is kukunin po natin yung adjusted net income. So, since given na yung net income na 33 million, i-add lang natin yung interest on bonds which is 2,100,000. Makakuha na natin yung adjusted net income na 35,100,000. And then next step po is kukunin natin yung total ordinary shares. So, since given na yung ordinary shares outstanding na 10 million, i-add lang po natin yung potential ordinary shares from bond conversion na 8 million. Bakit po naging 8 million? Kasi yung 4 million times 2, which is yung 2 ordinary shares for each bond. Kaya naging 8 million. So, the total ordinary share is 18 million. So, since meron na tayong adjusted net income tsaka total ordinary shares, i-divide lang po natin sila. So, makukuha natin yung diluted earnings per share na 1.95.
Hi! This is the last problem of chapter 33. Let me read you the problem. Accenture Company had made a net profit attributable to ordinary shareholders of 2 million for 2021. There are 100,000 ordinary shares outstanding during the entire year. Since January 1, 2021, there has been 800,000 of 5% convertible loan issue. The term of conversion for every 10,000 nominal amount are June 30, 2021, we have 120 ordinary shares. On June 30, 2022, we have 150 ordinary shares. And on June 30, 2023, we have 140 ordinary shares. No conversion has taken place during the current year. The interest on the convertible loan is allowable for a tax relief of 30%. The question is, what amount should be reported as diluted earnings per share? This is the solution. We have a net income of 2 million, interest on bonds which is the 800,000 times 5% times 70% with a total of 28,000. The adjusted net income is 2,028,000. While the ordinary shares outstanding is 100,000. The potential ordinary shares through conversion of bonds on most favorable terms, which is 800,000 divided by 100,000 times 150 is 12,000. The total ordinary shares is 112,000. To compute the diluted earnings per share, first we have to get the adjusted net income over total ordinary shares with the amount of 2,028,000 over 112,000. The total is 18.11. So 18.11 is the diluted earnings per share.
For our topic summary, ang tinakal po natin ngayong araw is the diluted earnings per share, one of the computations of earnings per share of an entity. And ito pong diluted earnings per share is ginagamit na computation kapag po ang capital structure ng ating company ay complex, where it includes the potential ordinary shares na convertible preference shares, convertible bonds payable, and options and warrants. Our formula for diluted earnings per share is net income over ordinary shares. Diluted earnings per shares is computed when an entity has potential ordinary shares that are dilutive or have the capacity to weaken or to lessen the earnings per share. Potential ordinary shares are dilutive if, when exercised, they decrease basic earnings per share or increase basic loss per share. Computation for diluted earnings per share is based on the as-if scenarios. And diluted earnings per share is not presented if the effect of the potential ordinary shares are anti-dilutive. What do we mean by anti-dilutive? This arises if the potential ordinary shares when exercised increases the earnings per share or decreases the basic loss per share. So, ito po yung mga summary about sa formula nila. Sa convertible bonds payable po, kung i-apply po natin ang formula ng diluted earnings per share, the adjustment on net income is ina-add po natin. We add back the interest expense on bonds payable net of tax over the number of ordinary shares outstanding increased by the number of ordinary shares that would have been issued upon conversion of the bonds payable. So, yung net income po over number of ordinary shares, ito po yung kanilang adjustments. And next po, sa convertible preference share, net income din naman po, but it is not reduced by the amount of preference dividend. Hindi po siya katulad dun sa basic earnings per share na cumulative po is binabawasan, whether declared or not. Dito naman po, hindi po siya binabawasan by the amount of preference dividend, except when the preference share is not non-convertible. Tapos yung adjustment naman po sa ordinary shares, Same lang po sa convertible bonds payable wherein the number of ordinary shares outstanding is increased by the number of ordinary shares that would have been issued upon conversion of the preference shares. So that's all that sums our topic. Hope you learned something from it. Thank you po for listening.